Hello and welcome to today's video. Now in today's video we'll take a look at Fin Nifty as it has its expiry, and its expiry trade will be rather interesting due to the candle pattern and the whole price action pattern. It formed on 27th May, on Monday 27th May. So now while recording this video, on the news front there is not much. This is the US markets are closed due to Memorial Day. Moreover, the British markets are also closed due to the late May bank holiday. The European markets are open, but they're basically unchanged as they only have modest gains, as there's a lot of speculation going on about what the European Central Bank will be doing in the coming days in terms of interest rates. Now on the commodity front, oil prices are holding steady, as also the oil market is basically waiting for an outcome on the upcoming OPEC meeting. So everything is holding still right now. And when we look at our markets, today we opened positive and then came down towards the end of the day. That was a perfect thing, as it has sort of formed a very interesting chart pattern on the Nifty, Bank Nifty, and even on the Fin Nifty. Now the Bank Nifty is the more major one. However, I'm today covering only the Fin Nifty as it has its expiry. Now when we look at the Fin Nifty, today's price bar basically had a good rise and then it came tumbling down, and it is a very important candle according to me. This is as first of all, I expect us to trade within the range of this candle, and as long as we do that, option buyers will get a small amount of move. This is as the range is slightly bigger. However, this will be more beneficial to option sellers, that they can sell calls and they can sell puts. However, whenever we break out of this range, especially on the downside, then we can expect a very big sizable drop, and that is what will give option buyers a really good profit in terms of put buying. However, as long as we're in the range, there is not much that's going to be there for option buying to be done. Now, how I see the Fin Nifty trading tomorrow and also in the days to come, due to the candle we formed today, there is a likelihood that we can go up and try to test the top of the candle, and that will be technically good for the bears also, and also good for the bulls. So how it performs at the top is what is going to really decide how everything goes. According to me, the top is going to be very important, and it's not going to be very easy for then Fin Nifty to just go above it. Now we'll drop to the intraday chart so as to cover it in a more precise manner. Now on the intraday charts we can see what has been going on, and I've loaded the 15-minute chart. Now today we formed the top around here, and then we can see we just hovered in a box range, after which when we broke the box range we can see the fall which we had. That was a very nice fall, as basically I managed to catch it in a good way, and the indicators we were giving clients also worked perfectly in it. Now how I expect tomorrow to trade. Now this is the resistance between 22,100 and 22,150 is going to be very important, and it will be very key to see whether we are able to break above it. However, if we hold below it, and I would say in terms of option buying and option selling, if you're not able to break above 22,064, then option sellers can start selling calls above 22,100 and 22,150, which are expiring in the expiry. That is going to be a bit over a zone that will get a bit of hits, but most likely it will not be able to blow straight past through. So how I see for option sellers on the upside, 22,100 is a risky option sell, as you can get a bit of injections. Those sudden spikes which book you out, then it comes back to how it was. However, 22,150 and above should be a very clean selling point, and there shouldn't be much danger, provided the index is number one not able to take out this 22,060 mark and 22,100. Provided it stays below that, 22,150 and above, option sellers are relatively safe. Now on on the put selling side, there is where I'll be more cautious in basically expiry trading this in terms of option selling. This is a by chance we break 21,920, then we can have a very quick fall to 21,800, and that will smash any put seller on the whole. So now in terms of option buying, how do I see it? As long as we're trading between 22,060 and we can say 21,950, that range is not going to give people much, and it's going to be more of a box range move. If we break this, then there's a small move to 22,100, which won't also give much, but if you break that, then 22,150. On the other hand, if you break 21,950, then I would say then it's a clean shot to 21,920, and if any weakness comes there, 21,800. Overall, I expect tomorrow a two-way move. This is as the bulls will try to go and test the top, and we'll have to see how successful they are in doing that. But if we go towards the top, then I expect us to fall again in a sharp way. So I expect basically like an inverted V tomorrow, and that should make trading tomorrow very interesting. But that is only if we break above 22,060 and break below 21,950. If we don't do that, then we're just going to, if we attain that range, then there's going to be nothing for option buyers and everything only for option sellers. So that's how I view the market for tomorrow. So do say and you send any suggestions you may have in the comment box, so you can send it to the WhatsApp number, and I will consider them. And any questions you may have, you can also drop in the comment box and also send via WhatsApp. Do hit the like button and also subscribe to the channel. Thank you.